8 a.m. Eastern, August 14th, and this is your daily crypto report. Bitcoin is up slightly at $62,798. Ethereum is up slightly at $1,876. BNB is down slightly at $604. Well, Tether said KPMG U.S. issued an unqualified or clean audit opinion on Tether International's full 2025 financial statements, marking the USDT issuer's first completed independent financial audit after years of promises. KPMG separately confirmed it audited the company under AICPA standards. Tether said the audit covered its complete balance sheet, including reserve assets and USDT liabilities, as well as its income statement, changes in equity and cash flows, with KPMG testing transactions, systems, ownership records, valuations, counterparties, and supporting evidence. The firm also physically inspected and counted every gold bar held by Tether. The audited statement showed reserves exceeding liabilities by $6.8 billion at the end of 2025. The milestone follows past scrutiny over Tether's reserves. Gemini shares fell more than 7% in after-hours trading after the crypto exchange reported a $107 million second quarter net loss. CEO Tyler Winklevoss acknowledged that Gemini still has work to do, while its shares are now trading near record lows below $4. Well, a Washington court has ordered Kalshi to stop offering most prediction markets in the state after finding the company likely violated state gambling laws. The restrictions cover contracts tied to sports, elections, politics, entertainment, culture, technology, science, and mentions. While markets related to commodities, climate, economics, and finance can remain available, Kalshi must implement IP and residency-based geofencing by August 19th and a multi-source geofencing system by September 2nd, and it is also barred from advertising the restricted markets to Washington consumers. Kalshi argues for federal preemption, while several states say contracts tied to outcomes such as sports are effectively illegal gambling. Well, MSCI is considering a new eligibility framework that could remove Strategy and Metaplanet from its global investable market indexes by screening out companies that function more like asset-holding vehicles than operating businesses. A simulation using May 2026 data would have removed Strategy, Metaplanet, and uranium investment company Yellowcake, while SharpLink, Center Laboratories, and Lydia Holding would be placed on a watch list. The proposed two-step test first looks at whether a company has sufficient operating assets, then evaluates 5 metrics. Companies that fail the initial screen and trigger at least 4 of the 5 flags would be considered ineligible. No index changes have been made yet. MSCI is accepting feedback through September the 30th. Well, a Hyperliquid user appears to have lost about $550,000 in USDC after clicking a malicious Google search ad that led to a fake Hyperliquid website, according to Flash Rescue co-founder Darcy, who cited blockchain data showing 3 transfers to attacker-controlled addresses. Google said it suspended the advertiser, adding that it blocks 99% of policy-violating ads before they run and removed more than 602 million scam ads last year. Crypto security nonprofit Security Alliance said in April that it had blocked 356 malicious Google ad URLs over several weeks, including multiple Hyperliquid impersonators, with scammers also targeting major Ethereum and Solana apps such as Jupiter, Radium, and PumpFun. And finally, nearly 14,000 Trezor customers had personal information exposed after an unauthorized party accessed order data held by shipping provider ShipMonk. The breach exposed 11,742 customers whose names, email addresses, phone numbers, and shipping addresses were revealed. Trezor said its own systems were not compromised and its hardware wallets remained secure, but warned affected customers face increased phishing and impersonation risks. Chainalysis recently reported that more than $30 million in crypto had been stolen through violent attacks in the first half of 2026, putting the year on pace to exceed the $58 million stolen in 2025. That's all for us today. Visit us at dailycryptoreport.io and listen to us everywhere else you podcast under Daily Crypto Report.
From the history of Hershey to the business behind the hit podcast Acquired, Cold Call, the chart-topping management podcast from Harvard Business School, gives you a seat in the classroom where these legendary cases are brought to life. I'm Brian Kenny, the Chief Marketing and Communications Officer at Harvard Business School and the host of Cold Call, which explores the real-world case studies taught in our classrooms, featuring the professors who wrote them and often the executives, entrepreneurs, and innovators who lived them. In each episode, we break down the decisions, trade-offs, and leadership lessons behind some of the most fascinating organizations. Not to mention, we just dropped a new video series examining AI case studies like the Atlantic's partnership with OpenAI, Mass General Brigham's use of AI to streamline clinical documentation, and Harvard Art Museum's experimentation with generative AI. So don't miss out. Follow or watch Cold Call on Apple Podcasts, Spotify, YouTube, or wherever you get your podcasts.